Hey everyone, and welcome to the Trader's Apprentice blog, episode 7, The Big Short. So, what is going short? Well, short selling is the sale of a security that is not owned by the seller or that the seller has borrowed. Short selling is motivated by the belief that the security's price will decline, enabling it to be bought back at the lower price to make a profit. So, to get your head around this, essentially you need to think that you don't own the security or the token, in our case for crypto. You're essentially borrowing it from the exchange. And then you sell the token at a higher price with the expectation that the price is going to drop and you will buy it back. The difference in that price becomes your profit. However, if the price goes against you, you still have to buy it back, which in that case means that you incur a loss or you've had to buy it back at a higher price. So how does this occur? This occurs by margin lending by the exchange, but you have to have an amount of collateral in your exchange wallets, okay? And that collateral has the potential to be liquidated if the price goes too far against you, which is why it's very critical to have a stop loss in play, especially if you're using leverage. So what you really have to think about is you're not owning the tokens, okay? You are borrowing a token, you're selling it high, and you're buying it back lower. You don't effectively own the token, okay? You're essentially buying a contract, and I think the terminology used in the stock markets and others are contracts for difference, or CFDs, okay? So the two most important, or two most popular, exchanges for shorting are Bitfinex and BitMEX. Now, both of them have advantages and disadvantages. Bitfinex allows you to margin trade or to short and go long, I guess, with a margin of about 3 to 1, and it is fixed. You cannot change that. So that's a plus and a minus in my book. It limits the amount of leverage or margin that you can borrow to trade, and it also stops you from going crazy and losing your money. But it is a fixed thing, okay? So you're fixed at that margin. You can't just trade one-to-one for their margin trading. The benefit with Bitfinex is it's a professional trading platform. It has very good order characteristics and entries and facilities, and it's used by professionals. The other downside with Bitfinex is you need a minimum of $10,000 US to start an account and start trading. However, a disclaimer, I think if you put the $10,000 and get started, you can then remove some of it and continue on your merry ways. So for those who think that there's a complete limitation there, you might be able to transfer $10,000 from your savings in there, get started, and move half of it back out. I haven't tried that, but I believe that can occur. The other is BitMEX. Now, BitMEX again has its plus and minuses. It allows up to 100 times leverage on some of the contracts, which in my mind is just frightfully dangerous and something I do not encourage. Its limitations, however, are that there are only a small number of tokens that you can use. So what I'm going to do, guys, is I'm going to go through both exchanges very briefly. I'm no expert in either of the exchanges, and there are thousands upon thousands of YouTube videos that go into far more detail. But the idea with this video is to just get you familiar, get you started, and show you how to go short. So firstly, let's have a look at Bitfinex. Okay, this is what you'll see when you open Bitfinex. You'll have your charting based on TradingView, and you'll even have some of the drawing tools down the side here, so it's fairly familiar. You'll have your open positions, you'll have your orders, you'll have order history, and you'll have order book. Okay, so this is the buy side. This is the buyers lining up the number of orders, the amount of Bitcoin in this case, and the total, and this is the number of sellers. And this is the trades on the right hand side here, the actual activated trades. Okay, coming across to the left hand side here, you have all your tickers or your available tokens that you can trade, and you can click on star to put some of those as favorites and sort per favorites. But these are all the tokens to either US dollar, Ethereum or BTC pairings that you can trade. Now, I won't open my balances and summary down here, but one thing to think about with Bitfinex is that it has 3 different wallets that are allocated to your account. The first wallet is your exchange wallet, and that is similar to Binance, where you simply want to buy a token and trade a token. So you can buy and hold as an investment, or you can buy and trade, similar to Binance. You cannot short sell on the exchange, and you can only use the funds that are in your exchange wallet, and you'll see those 3 wallets under balances. The second wallet type is your margin wallet, and your margin wallet is used as collateral for your contracts. Okay, and if you have, for example, $1,000 in your margin wallet, Bitfinex will allow you to trade up to $3,000 in total. That's the 3-to-1 margin that is fixed with Bitfinex. Now, the third type of wallet is called a funding wallet. Now, I haven't spent too much time looking into this, but my understanding is that if you have, say, a number of tokens that you wish to buy and hold long term, i.e. Bitcoin or Ethereum, you can put these in the funding wallet, and the Bitfinex exchange will use your funds to fund contracts that people or trades that people are entering. And the benefit with this is that your money is secure through the exchange. However, you incur an interest on every trade, so you can actually earn money for your longer term investments. Now, I'm not sure how much you will earn. I don't know what the percentages are. But yeah, anyway, there is that option if you guys want to have a look into it. Now, the crux of the video is to show you guys how to go short, and that's here in the order form. So just quickly, I'll go through the exchange. The exchange has your standard limit, market, stop limit, trailing order, fill or kill orders, which most of you guys will be familiar. A trailing stop is exactly that. It is a stop loss that trails your trade. You can set that to a certain price differential. And the fill or kill is when you place your limit order. If you don't get a complete 100% fill, it will kill the order. So you're not into a trade with only a portion of your fill. I'm pretty sure we know the rest of the order types. But if we don't, I'm going to put 2 different YouTube videos in the comments for this video, which can assist you in order types. Okay, so in exchange, you can pretty much only buy. You can't exchange sell. Although the sell there is highlighted, but that's for your stop loss position. So, right. So Bitcoin, for example, Bitcoin against the US dollar. Let's talk about going short. So you click on margin trading here, and you have again all your order types, of which we would typically use limit order or stop limit to enter a trade. The other functions here are one cancels the other, which I'll explain in a moment. Hidden orders, so if you want to hide your order in the order book, you can do that, but I believe there is a fee for that. Post only, it's to do with the fees. There's a maker fee and a taker fee, and it's about how you take your position in your contract. If you're buying, you're generally having a maker fee that comes from this side of the order book, or if you're selling, you have a taker fee. It's not something that I've gone into a lot of detail with. Fees like Most crypto exchanges are fairly low. This one is I think it averages out to about 0.2 or 2%, 0.2% per trade. And I don't go into a lot of that kind of detail. I just trade as we do, right? Reduce only is a good function that if you're margin trading and you have a position that any other order you put on the same token can only reduce your position. So an example of that would be, let's just say that you're going long on Bitcoin for 100 Bitcoins, right? Okay, an unusual order, but that's just a number I picked. So if you're going long and then you go and put a sell order in and you accidentally hit 1,000 instead of 100, what that would actually do is sell your 100 Bitcoin and then put you into a short order for 900 Bitcoin, which I'm pretty sure you don't want to do. So the reduce only is quite a neat little function to make sure that any errors you make in haste or otherwise protects your position. Okay, so let's just say that now I want to go short Bitcoin. Now obviously what you see on the chart here, there's no recognizable pattern or anything. This is just an example. So if I click on the horizontal line and let's say that I have put an order in, let's say I want to put an order in if it comes back up and hits this point. So that's at 6481. So I'll put a limit order in for a price of 6481, sorry, 0.9. The amount of BTC I want to do, let's just say it's 0.002, which is the minimum you're allowed to use. And you hit margin sell. So that will now create an order up that point where that line was. So I have an order there. Obviously for the video I don't want that to activate, so I'm going to cancel that off, and if you come down here and see your orders, you can hit cancel. So I'll put that line back in there. That's close enough. Now let's just say that that's my order still in play, and I now want to set a stop loss. So I will then pick a stop limit, and I would like to reduce only my position, and my stop limit price is going to be, let's just say 6,500. And my limit price, which is the stop, is when you activate your limit order, and your limit is the maximum that you're allowing it to buy it back at. So that's 65, say 10. And then I would hit margin buy, and it would put that stop limit order in there for me. I've got reduce only, so it won't enter me into a position if I hit that, but I'm not going to do that. The other thing I think is quite interesting when we talk about our scaling and scaling out of one-to-one is our limit orders and using the one cancels the other. So what that does is it means that I can take a profit, and it means I can take and put in a stop loss at the same point. So say my entry has gone in at the 6474 position, and I want to sell my position in profit at say 6,300, and I want to put a stop loss in at that 6510. They'll put market order or limit orders in there for those two positions. Essentially, when the limit hits those positions, you will get a market order. Now, when you get a market order, you will sell at that price or better, so you can get some slippage. And if you want to look into slippage or ask me a question about that, look that up for yourself. So since we're in a sell order, we would have to hit margin buy for those to activate, and then you'll see two positions either side of our line. One is your stop loss here, one is your target. So once you entered a trade, you can put both orders in and essentially walk away from your computer. Again, if you wanted to scale out at one-to-one, when you put your target in there, you can put half your position or 1.001 BTC in there, But what you would have to do then is put a second stop loss for the other half of your position. I hope that's not too confusing for you guys. And I guess I'd open myself up to you guys now to do any one-on-ones if you want to go into any more detail about the orders and order types. So we can cancel those two off now, so I don't have any active orders. That's a very brief summary on how to work with these orders. Again, spend some time looking at how the order types work, and I've got those other two videos I'm going to put behind for you, put below in the comments. And that'll get you started, I guess, in Bitfinex. Now, I'm going to step across to BitMEX and give you a rundown of BitMEX. Before I do that, though, I'll go back to TradingView and I'll explain a few things about BitMEX. So, BitMEX uses mercantile exchanges, so you're actually trading in futures contracts. Okay? BitMEX will only accept BTC to fund all your accounts and your contracts, and everything is settled in Bitcoin. So the tokens available for charting in BitMEX are located across the top of BitMEX, and I'll come back to that in a second. But when you're in TradingView, you can type in BitMEX and put a colon, and it will show you all the different contracts that are available and the indices that are available for BitMEX. Now, BitMEX has two types of contracts. One is a perpetual contract, which is an ongoing contract, and the others are fixed date or fixed date contracts. Okay, and the index is what the contract is traded over the top of. It's what they use as a reference point. So all types of indices, expire at a certain time. Okay, so if you have here, you've got the perpetual for Bitcoin index. Where are we? Look, they're all here. You can go through the contracts that end in September. You can go through the indices that they're all based on. And I've got a little BitMEX here, which I've got US dollars, Bitcoin to US dollars, and then I've got the indices for the others to use for trading. For Tron, what will happen is you'll have the contract for Tron, which will only start when the contract started. So if I go to the daily, this contract here for Tron started in July and expires at the end of September, so you don't get all the history. If you want the history for your charting purposes and to see trends, you have to go and use the index, which can go backwards. I guess Tron's not a good example because it only came on the exchange about the same time. But you get the idea. I usually use the indices for my charting and anything, but to be completely honest, I fundamentally only use BitMEX to trade Bitcoin and possibly Ethereum because I don't want the complication of my contracts ending and closing me out of a position if I'm in a good position and either not monitoring it close enough or something happens. Okay, so quickly, when you open up BitMEX, you see a screen similar to this. There you can customize the screen. You can have a whole different bunch of options that you can remove and change around, order books and your charts. I tend to customize this, which means that I've got a particular setup that I like. So I have the order book here, I have the charting here. Probably the charting is not quite as good as Bitfinex. It allows you to put some indicators on there, but it doesn't allow you to draw lines and things. Below you have your positions, your closed positions, your active orders, order history, and whatnot there. And again, you have the same type of orders here. You have your limit orders, your market orders, and your stop market or stop limit orders, trailing orders, etc. Again, I'm not going to go into the detail of all this. I just want to get you guys started, get you on the exchanges and get you familiar with the exchanges and teach you guys how to short. Again, most of our orders will be limit orders based on our chart patterns and our entry strategies. So going back to Bitcoin, perpetual contract, The difference is here, when you enter your position, you need to enter in the US dollar figure. So if you're going to buy 1 Bitcoin, you need to put in the price of the Bitcoin, 6385, and they can only do whole dollars. So your Bitcoin, and you put your price in, sorry, if you want to buy at the same price, 6385, then you can see your cost of doing this contract is 1 Bitcoin, okay? Now, it's very rare that we'll put 1 Bitcoin on a single trade, so you can put in $100 worth of a Bitcoin, which down here kind of gives you a cost of 0.015 Bitcoin, and they use XBT for Bitcoin on this exchange. I know it sounds confusing, but you do get used to it. Now, if you wanted to trade 1 Bitcoin without the expense of 1 Bitcoin, well, that's where the wonderful feature of leverage comes into it, because you're going to borrow money or leverage money from the exchange to make your transaction. For perpetual contracts, I think you can use up to 100 times leverage. For some of the other contracts, they limit to 20 times. I thought there was a couple of 50s for Ethereum and 33 times for Litecoin. I'm not sure why. But again, like I said, I only use perpetual contracts. And so using leverage, well, what leverage does is means if you're using 2 times leverage, that means that the cost of doing this contract is halved. So if you're buying 1 Bitcoin, you're only spending half a Bitcoin. If you go up the scale to say 10 times, you can trade 1 Bitcoin's worth of contract for only 0.1 Bitcoin of cost. Okay. Again, they have different order types, your hidden orders, your reduce only orders, etc. Now, the other way that we can enter a trade is using a stop limit order. Okay, and you can buy and sell using a stop limit order. So if the price goes up past say a breakout point, if you're trading breakouts, which we don't typically do, you can set your buy order at that point. What you want to do though is remove the close on trigger if you're buying, because this will only reduce your position. You use close on trigger when you're using the stop limit as a stop loss. Okay, and again, I hope that's not too confusing, but there are plenty of videos that show you how to do that. So just again, quickly, I'll show you how to do a quick short order. Again, let's say that I want to short this stock at 6,500. I then go back to my limit order. I enter in how many Bitcoins I want to trade. And look, in this exchange at the moment, I've only got a 0.03 of a Bitcoin, so I can't go too crazy. So let's just say, for examples, I want to put $50 worth of Bitcoin on this trade. I can use 5 times leverage, or I can go back to 1 times leverage, and that equivalates to my $50 of cost. If I use 5 times leverage, again, it reduces my cost because you're leveraging for the contract. And if I short sell, I hit short. Okay, the price, sorry, I've got to put the price in properly. I want 6,500. I'm going to sell short. And the good thing about BitMEX is it brings up a confirmation order, so you can look at your order value, your leverage, so your actual cost, your available balance, the position, mark price, and it gives you an estimated liquidation price. So that is the price that if Bitcoin goes to 8,074, my entire account will be liquidated. And that's why it is absolutely critical to use a stop loss. Don't think it will happen. Well, yes, it will. And I have had an account liquidated. It wasn't a lot of money, and I'm not too concerned about it, but it's not something that I'll let happen ever again. So we hit sell, and our order should be positioned up here. The other wonderful thing about BitMEX is you can click this and actually move it around, and it changes your order. So you can move that around, okay? Your active orders sit there until you're actually entered in the position, and your actual active positions are here, which show your entry price, your mark price, your liquidation price, the amount of margin you've got on, and your unrealized profit and loss percentages. So you can manage your trade from this position. So assuming that I was in a trade, I can then come along and put a stop order in as a stop limit or a stop market. Again, you've got to be very cautious with slippage, with your stops, and being such a risky prospect when you're trading with leverage. People go hunting and chasing your stops, so you want to be very cautious. And the beauty is, if you're putting a stop loss in and you're at a price that's higher than your entry price, for example, or in this case higher than the current price, it will only let you hit a stop buy. It won't let you hit the stop. So it won't typically let you add to your position unless you hit a limit order and try to add to your position, okay? Again, look, I'm no expert. I get my way around the two exchanges. I still use YouTube and other people to help me out. But this is the fundamentals and of how to get on board these two exchanges and how to start short selling. You can set, I believe, a stop limit or a take profit limit, and you can enter it out with, again, sort of a hands-off approach. But that's really all I wanted to cover today, guys. I didn't want this video to go too long. It's already at 26 minutes. So basically, I'll close this one out and say I hope that I've covered some very basics for you. I hope I've given you some insight on what to look for, and you can take that and either ask me further questions on Discord, or you can do your own research and look at the myriad of videos that are on YouTube that'll help you on your way. Again, I've got to contact Mitch and see how we're going for the one-on-ones, but I'd be happy to start helping people out with some of the questions that you may have on one-on-ones, and just got to work out how do we do that logistically. Anyway, guys, thanks very much, and hope you got something from this. Otherwise, hit me up in Discord, and I can answer your questions there. Thanks, guys. Bye.